Welcome back to another day of Shtick with Koolfrogg. We're having some issues with YouTube and the way YouTube is actually doing things. It's a pain in the butt, and we'll see how today actually goes with this stream. Last stream, it really seriously got to me. It disturbed me to the point where I just don't know. And I'm gonna go end this other one on them. Um, I mean, she can end it if she wants. If she's paying attention. But, as far as that goes, alri awesome, there she goes. Let's do this. Let's see if she actually clicks that button for me. She See if this actually works out. She ends it. Is she gonna end it? She's overtime. It's okay. "Hey, lady on Skype." First. Awesome. There you go. Let's see if she did she push it? Push it. Push it. Push it. There you go. Awesome. She did it. She did it. I'll be right back. All right. So, stick with Cool Frog. We go through a couple of different things. So this is actually a news stream. The last few days we had kind of hit on the SBV banking that had actually been uh, we've gone through it, the last couple days. We're gonna actually go through a little bit more of that smooth transition. That all awesome. Glad you're all here. Still can't remove posts. Yeah, I figured. Really didn't see that it was gonna change going from one to the other. I just assumed that was gonna be the issue. Um, like I said, we're gonna go through some of this banking stuff or whatever that's been uh, world news, not just news here in the United States. There's been an awful lot of um, different banks that have been affected worldwide. And of course, I'm not completely totally interesting factoid. There have been 16 banks that have failed in the last 5 years. They're all smaller. The main difference, the banks failing now have China investments, as well as multiple other people that are actually invested in these. It seems as though um, things like Black Lives Matter, as well as um, Obama's, the Clintons, and several others that actually have monies, investments in these particular banks. Go figure. They also BlackRock has a big part. Yeah, yeah. It's exactly. That's exactly what it is. This is not something to take lightly because when we actually comes down to the brass tacks and what is actually happening, uh, there's a good chance that we're actually going to see currency uh, devolve into crypto. That's what they've been trying to do for a while, and that's what they're going to continue to push. That's where they want this to go. They don't want to save this. They don't care. They don't care about anything. They don't care about us. The only thing they care about is themselves. Themselves. And like I said, I got several articles here or whatever in no special order. I was just digging through looking for stuff that was just due to this banking crisis of uh, SVB and as well as a couple others. Uh, Share a screen here. Let's get something up here real quick. So then here's the Black Lives Matter movement received nearly $83 billion from corporations. When you actually look into it, yeah, you can actually see that it has a lot to do with this banking deal. This is the Black Lives Matter movement's related causes received an astonishing $82.9 billion from corporations. A new funding database from the Claremont Institute has found. The Claremont Institute Center of American Way of Life explained the necessity of the report in an article published on Newsweek. And the center asserted the 2020 BLM movement that about more than just rioting and destruction. The center explained the BLM pressure campaigns, harassment, and moral blackmail also amounted to possibly the most lucrative shakedown in corporate America in its history. As a point of reference, $82.9 billion is more than the GDP of 46 African countries. In 2022, the Ford Motor Company's profit was just $23 billion. They also noted the sum of the $82.9 million includes more than $123 million to the BLM parent organization directly, as well as much more to the organization supporting BLM's agenda. The list reveals that several popular corporations with wide range of different industries supplied the movement with large sums of cash. Walmart, for example, which is based out of Arkansas, got a whooping $100 million in support from BLM and related causes focusing on racial equity. Amazon gave even more, supplying the movement with an astonishing $169.5 million. Silicon Valley Bank gave the movement $73.45 million. Oh, you don't say. Silicon Valley Bank, this one that's actually having issues, is supporting these movements like this and funding them with $73.45 million? Excuse me? Meanwhile, the pharmaceutical company AbbVie gave the movement $62 million. Allstate gave $7.7 million to the cause. American Express gave $50 million. Apple gave $100 million. AT&T gave $21.5 million. The movement and its causes received another $90 million from Nike. United Airlines, JetBlue, Southwest Airlines, and Delta Airlines all gave money to BLM and related causes as well. Bank of America, meanwhile, provided $18.25 million to BLM and related causes, while Wells Fargo diverted $210 million towards BLM and related causes. Duluth gave $85 million to BLM and related causes. Asset management giant BlackRock put a shocking $810 million towards BLM and related causes, while other powerful financial institutions also bankrolled the movement, with Capital One Financial giving $10 million, Morgan Stanley giving $30 million, U.S. Bank giving $160 million, and Goldman Sachs giving $10.1 million. Meanwhile, Prudential Financial supplied the movement and its related causes the sum of $450 million, but was outdone by MasterCard, which gave $500 million. This is ridiculous. If this many companies are actually just throwing money at these people to go ahead and burn down our cities, burn down our country, destroy everything that this country's ever been about, and just make it our lives worth shit. The database found that the Boeing gave $15.6 million, while Northrop Grumman gave $2 million, Raytheon gave $25 million, Walt Disney Company gave $8.8 million to BLM and related causes, while the Pokemon Company gave $200,000. The Claremont Institute Center of American Way of Life has explained out how the funds have been used, remarking that the global network is investing tens of millions of dollars to support future operations, purchasing luxury estates, engaging in nepotism, dispersing grants to dozens of BLM chapters and revolutionary organizations, and operating a PAC to elect progressive community leaders, activists, and working class candidates fighting for Black liberation. Meanwhile, local BLM chapters are spending millions on activism and initiatives to defund police departments, and BLM at school is indoctrinating children around the country in critical race theory and queer theory, teaching them to hate themselves, their peers, and their country. This is exactly what they've been trying to do. They've been trying to force this for a reason. They don't want us to actually care about anything. We'll have nothing and be happy is what they really want us to do. They don't care about us. They don't care about us at all. And when I say us, in a whole, everybody, they give a shit less. They don't care. Banks are issuing billions of dollars as subprime loans to help end a systemic racism, all while corporations are funding leftist bail funds that release violent rioters and criminals into the streets and collaborating with to create radicalized anti uh, meritocratic hiring schemes. The shakedown may be viewed as a form of reparations made to self-declared enemies of the American nation and way of life, they added. So I mean, I know it's not really about the bank, but yet at the same time, when you actually look at what is actually happening, you can see this bank that's there did give this movement $73.55 million. Now, this bank isn't just a tiny little bank, it's a very large bank that's actually heavily invested by Chinese Communist Party. Joe Biden has gone to the point of actually um, signing orders to actually bail these people out because he's like, I don't care. Well, because he doesn't care and he just wants to, watch us just, flop. It's going to get very disturbing very quick. I wish America Shirts would come in here because I know damn well that he's got thoughts and opinions on this. Um, okay, so next one. This one's kind of has something to do with the last one, sort of. You can actually see that they're going to actually emphasize Silicon Valley Bank spending 74 million on Black Lives Matter and social justice causes. This is Silicon Valley Bank's collapse is almost entirely self-imposed, but they're getting an almost bailout anyway. President Biden has said the taxpayers will bear the brunt of guaranteed. The taxpayers will bear the brunt of guaranteeing? Oh, okay. That's awesome. Yeah, Shirts is MIA again. Chant for him. Chant for him. See if we can't get him to show up because he did say that he would try, and he really said that he wanted to, and that he wanted to talk about this particular subject. So I really don't know what is actually happening with him. It's really kind of saddening to not have him here. I really, really wish that he was here because I know that he has thoughts and opinions on this. The Federal Deposit Insurance Corporation (FDIC) already insured deposits up to $250,000 of pittance compared to the collapse of billion-dollar bank. Many in the financial punditry class believe that the move is necessary to prevent a chain reaction that could take down their big investment banks. There's plenty to be debated about the merits of that action, but it certainly does make it harder to accept that Americans are being forced to bail out millionaires when SVB has been grossly irresponsible with their own funds. As it turns out, SVB has a massive donor of Black Lives Matter and other social justice causes in the tune of $74 million, 73,450,000 to be more exact. The figure comes from an extensive report dropped by Claremont Institute on Tuesday. The report details $82 billion in social justice BLM investments by major American companies. SVB stands out as one of the larger donors next to the big donors like Apple, Comcast, while the top of the donation pool, those contributors do pale in comparison to donors like BlackRock and Citigroup. However, the group did pledge on their website to provide a total up to $11 billion in 2026 for diversity, equity, and inclusion. programs and racial justice causes, diversity, equity, and inclusion. This is the stuff that they want to actually push um, tenfold at everybody. This is the stuff that they want you to actually understand. This is the stuff that they want you to actually get at and forget about everything that you've ever known and been taught. SVB executives explained that their website, the turbulent racial atmosphere following the George Floyd killing and protests, prompted them to expand opportunities for dialogue, a calling that doesn't seem too much more concrete investment return, but ended up taking $74 million out of a bank coffers anyway. Will Hill, the executive director of Consumers Research, told the Federalist that SVB's failure on the heels of its left wing activism is yet another indication that SVB was focused on woke virtue signaling instead of protecting their customers' deposits. Time after time, we see the same pattern. Companies that are the most concerned with ESG scores. ESG scores. And this is these environmental, social governance scores that are trying to be implemented across the board uh, for all of us to be able to live on this planet. We must actually have an ESG score, and we must actually do what they actually tell us. You might as well just take us back to 1945. Just saying. Just saying. That's pretty much what they're doing. That's what they're doing without actually doing it. The company's corporate responsibility report leaned heavily on the environmental, social governance sections. Some of the report's major concerns included climate and environmental finance and investment, climate and environmental risk management, climate and environmental impacts from operations. There you go. Climate change. Because climate change is a big thing that is a freaking lie. I know. The earth warms up, the earth cools. It's what it does. It's been doing it for years and years, thousands of years. You're not going to sit there and tell me that this is something new, that they're like, oh my God, it's climate change. We must actually do something. Do you remember what was it? What, 5-6 years ago now? When Greta Thunberg actually came out and actually said that we needed to actually do something, became the biggest face on the planet for climate change. She said that we would be done by 2023, 2024, one of those two, something like that. When you actually look at it, guess what? Oh, we're still here. Water hasn't actually risen any further than what it originally was. The EDC of thinking that climate change is actually going to do something or is actually there, it just disturbs me. I really don't. I don't care who tries telling me that climate change is an actual thing. I don't care. I don't care. It's not affecting us. It's not affecting us like they try saying it is. They just want to say it so that they can actually push these Green New Deals and these green initiatives to actually remove the use of fossil fuels. It's so fucking dumb. Because thinking that you're actually removing the use of fossil fuels to actually go to wind and or solar panel, what do you think they're using to build these panels and these turbines? Yep, you're right. Fossil fuels. It's so fucking dumb. Elon Musk said to heat up Mars enough for us to live on it would be to drop nukes at each of the poles. Let's see. The last 3 bullet points: diversity, equity, inclusion across leadership, workforce, supply chain, and communities. Yeah, that's what we need. We need to be, use equity because equity, the outcome will be the same, right? Nope. Just no. It doesn't. That's not how it works. If both of us. Okay, so there's 15 people watching. Make sure you hit that like button. If the 15 of you and me, all 16 of us, went out and we actually, with equity, went and equity versus adequacy. If we actually go and went to do something, do anything. Let's go for a race. Let's go for do a little quarter mile race, or let's do almost anything. Let's put a puzzle together. Each one of us has the same puzzle, and we're all going to put it together at the same time. Equity would say that we would all end at the same exact time with the same amount of knowledge. Wrong. If we're all running down the street, sorry, my 5'11", um, you know, rather a little bit overweight, but at the same time, uh, not really, went for a foot race with a couple of you that are in your 60s. Equity would say that we were going to end together. We would finish the race on the same foot. That's not how it works. You know damn well that I'm a little bit younger and I'm probably going to outrun your 65-year-old. I'm just saying. It's not how it works. You can't sit there and push equity and say, oh, this is the way it's going to be. No, it's not how it's going to be. Eventually, you're going to actually find out that equity does not fucking work. Community development, financial inclusion, economic equality. Again, equality. Equity, equality, all of it. Stop with the fucking bullshit terms. Quality of leadership, including skills and diversity. You can't teach somebody to be a manager of something. It's not how it works. You have to have a little bit of a brain and some mental capacity to be able to do most jobs. You can't go through life being a moron, not knowing how to read, and then think that hey, I should be able to do the same job as that guy because, I want to. If you wanted to, you would have paid attention in school when you were younger, and you would actually learn how to do all this stuff to actually be able to go get yourself the good job. I'm really seriously sick of equity, being a term that's thrown around like it's okay. It's okay. SJW started in 2006. I was almost yeeted out of grad school for questioning things. Go figure. Go figure. So then, I don't want to just like jump around from start to end. I didn't really have a chance to actually put this in a good order to actually go through it. But there's other banks that are actually having issues as well. So it's kind of we're gonna jump around a little bit. It's just how it's gonna work. So you can see here it says Europe's bank shares plunge, bonds rally despite SVB rescue effort. This is London, Sydney. Europe's bank shares suffered their biggest fall in over a year, and bond market saw a gigantic repricing of rate hike bets on Monday as global efforts to limit the fallout from the collapse of Silicon Valley Bank failed to ease fears. The dollar slid too, as Wall Street heavyweights such as Goldman Sachs predicted the U.S. Federal Reserve would no longer lift interest rates next week, capping the biggest three-day rally for short-dated treasuries since 1987. Europe's bank index tanked 6%, having shed 3.8% on Friday. HSBC's London listed dropped 1.45% after it said it would acquire the UK subsidiary of stricken Silicon Valley Bank for the token amount of £1 or $1.21 here in the States. Over the weekend, the Fed and US Treasury announced a range of measures to stabilize the banking system and said depositors at SVB would have access to the deposits on Monday. The Fed also said it would take additional funding available through the new Bank Term Funding Program, which would offer loans up to 1 year of depository institutions backed by treasuries and other assets these institutions hold. Overnight in Asia, the ongoing concerns were seen in Japan's Topix Bank index, which lost 4%, while Singapore's largest bank also shed around 1%. We're seeing a classic flight to safety, said Tom Caddick, managing director of Ned Group Investments. Higher interest rates and a slowing economy was always going to bite. And who are we blaming for high interest rates on things? Who are we blaming for all this? We're just going to blame ourselves. Oh, it's all just us. It wasn't the government. The government had nothing to do with it. They're all so good. We love the government. U.S. authorities have also taken over New York-based Signature Bank, the second bank failure in a matter of days. So there you go. Signature Bank gone, done. No longer a thing. It's failed. When you actually look at the Signature Bank and you look at who's actually got stuff with the Signature Bank, if you go back and you actually remember Trump actually being told that he can't access some of his banking stuff, was this bank. This is the bank that went woke and actually told Trump that he had, his assets had been frozen, that he couldn't access them. Analysts noted that importantly, the Fed would accept collateral at par rather than marketing to market, allowing banks to borrow funds without having to sell assets at a loss. Monday's route left more than 99% of the companies listed on Europe's benchmark stock 600 trading in the red. Only 3 stocks evaded the fall. Quintic, Reckitt, and Vantage Towers up 0.4, 0.2, and 0.1% respectively. One glimmer of hope was that futures markets showed that the Wall Street's benchmark S&P 500 opening fractionally higher later. So this moves on. A new headache for Fed. Such was the concern about financial stability that investors speculated the Fed would now be reluctant to rock the boat by lifting interest rates by a supersized 50 basis points next week, and might not even hike at all. Federal fund futures surged to price out any chance of a half-point hike, compared with the 70% before the SVB news broke last week. Instead, futures implied around 14% chance the Fed would stand pat. The implied peak for rates came all the way down to 5.08% from 5.69% last Wednesday, and markets were back to pricing in rate cuts by the end of the year. In the light of the stress of the banking system, we no longer expect the FOMC to deliver a rate hike at its next meeting on March 22nd, wrote analysts at Goldman Sachs. We have left unchanged our expectation of FOMC will deliver 25 BP hikes in May, June, and July, and now expect a 5.25 to 5.5% terminal rate, though we see considerable uncertainty about the path. Such talk, combined with the shift of safety, saw yields of 2 years of treasuries rise 7 basis points at 9:58 Greenwich Mean Time, 4.63%, a world away from last week's 5.08% peak. Yields were now down 66 basis points in just 3 sessions, a drop not seen since the Black Monday market crash in 1987. Much will depend on the U.S. consumer price figures revealed on Tuesday, with an obvious risk that a high reading of pile pressure on the Fed to hike aggressively, even with the financial system under strain. The European Central Bank meets on Thursday and is still widely expected to lift its rates by 50 basis points and to flag more tightening ahead, though it will now have to take financial stability into account. In currency markets, the dollar index, which measures the greenback's value against a basket of currencies, fell 0.3%. The pound and euro both rose around 0.2%, while the safe have Japanese yen surged more than 1%. Gold climbed almost 1% as well to 1,885 per ounce, having just 2% jumped 2% points on Friday. Oil prices lost over 1.5%, though the Brent back at 81.48 per barrel, and U.S. crude at 75.28 per barrel. You can see that the pound, though a dollar equals about 82 cents in pounds or whatever, or 0.82 pounds. Again, European banks are also going to have issues. You can see across that board, if you actually listen to all that, you could actually pick all that out. That Europe's banks are also going to fail, or slowly failing as we speak. This isn't just a simple little banking scheme or whatever to actually hurt us as U.S. citizens. This is actually going to hurt the world. This is going to hurt the world in a whole. This is not going to be good. It's going to be very horrible. So, like I said, there's several banks that are having issues. This isn't just the A bank. These are banks around the world that are pretty much going to shutter. Headline: Bank with over 176 billion in deposits shows ominous sign. This is shares of the First Republic Bank plunged more than 60% in pre-market trading on March 13th. Despite the lender reassuring customers that their deposits are safe amid concerns surrounding the collapse of Silicon Valley Bank and Signature Bank, in an email to clients on Sunday, First Republic founder and executive chairman Jim Herbert and CEO and President Mike Roffler stressed that the California-based bank and wealth management company's capital remains strong. Our capital levels are significantly higher than the regulatory requirements for being considered well capitalized. The email reads, adding that the bank has access to more than $60 billion available in unused borrowing capacity following support from the Federal Home Loan Bank and Federal Reserve Bank. In light, if recent industry events the last few days have caused uncertainty in financial markets, we want to take a moment to reinforce the safety and stability of First Republic, reflected in continued strength of the capital, liquidity, and operations. Seriously, they can say that they're actually doing just fine, but you can almost tell that being that they're actually coming out and saying what they are, that they're going to be just fine, that they might just not be. We'll find out next week. We are here to fully serve you. We stand ready to process transactions, wires, fund loans, and answer questions, serve you overall financial needs, as we do every day, they added. In a press release shortly after, the bank also sought to ease investors' concerns, noting that it had further enhanced and diversified its financial position, though access to additional liquidity from the central bank and JP Morgan Chase and Company. The total available unused liquidity to fund operations is now more than $70 billion. This excludes additional liquidity First Republic is eligible to receive under the new bank term funding program announced by the Federal Reserve today. Yeah, go figure. According to the latest 10K filing, First Republic held 176.4 billion in deposits at the end of 2022. As you can see, so this is workers tell people at the Silicon Valley Bank headquarters is closed in Santa Clara, California. So this is on March 10th. You can see they're actually like, no, go home. You're not here. We don't need you. Um, the First Republic shares tumble. Yep, there you go. There you go. They tumble. Go figure. While First Republic lists about 213 billion in total assets and is the 14th largest in the United States, the reassurance didn't appear to have done much to help soothe concerns, as shares of the company are down 62% as the time of writing, having fallen 33% last week. First Republic wasn't the only financial institution to see its shares drop in the wake of Silicon Valley Bank's collapse last week. PacWest Bancorp shares tumbled more than 43%. Western Alliance Bancorp fell 63%. Charles Schwab lost 8%. Elsewhere, Zions Bank Corporation shares dropped 21%. KeyCorp dropped 11%. And Bank of America lost 4% in pre-market trading. On Sunday, the central bank announced an emergency lending program that would make additional funding available to eligible depository institutions to ensure they met the needs of all their depositors. The additional funding will be made available through the creation of new bank term funding program, which will offer loans of up to a year in length to eligible depository institutions like banks and credit unions, made against collateral like treasuries and mortgage-backed securities and other qualifying assets. Those terms are less rigid than the ones the Fed normally provides and will effectively prevent the bank from having to quickly sell its assets in time for economic volatility. Uh, so this is Silicon Valley Bank shut down. Additionally, U.S. financial regulators announced that all depositors at Silicon Valley Bank will get their money back starting March 13th, which had been 2 days ago. The U.S. bank system remains resilient and on solid foundation in the large part due to reforms that were made after the financial crisis and ensured better safeguards for the banking industry. Secretary of Treasury Janet Yellen, Federal Reserve Board Chair Jerome Powell, and FDIC Chairman Martin Gruenberg said in a statement announcing the news. Oh, it took three of them to come up with the three sentences? What the hell? One sentence? Those reforms combined with today's actions demonstrate our commitment to take the necessary steps to ensure that depositors' savings remain safe. Federal regulators shut down Silicon Valley Bank on Friday after it suffered the largest U.S. banking failure since 2008, in part to a rising interest rates, a dry up of venture capital, and the fact that a high percentage of its customer deposits were invested in treasury bonds, which are highly sensitive to interest rates. Following news that it needed to raise 2.25 billion to bolster its balance sheet, venture capital firms reportedly advised companies to withdraw their money from the bank. Its stocks plummeted and ultimately financial regulators intervened. SVB was the 16th largest in the United States with $209 billion in assets as of December 31st, 2022, according to the Federal Reserve. Its collapse subsequently, but pressure its collapse subsequently put pressure on other small and regional banks in the United States, including Signature Bank, one of the main banks in the cryptocurrency industry, sending customers racing to pull their deposits. Signature Bank, which had already been in the spotlight over the alleged involvement of the now bankrupt crypto firm FTX, was closed by New York State financial regulators on Sunday. So Signature Bank went woke and went broke. Go figure. Oh. Just buzzed. I wish I was. The Fed is making things ever worse. Jerome Powell came to power at the. Is that the seriously the beginning of this? Okay. Powell came to power at the Fed with a determination to reserve an astounding errors of his predecessors, most especially Ben Bernanke, um, who received the Nobel Prize for the dumbest central bank policies since the Weimar Republic. Back in 2008, Bernanke um, pushed borrowing costs for banks to zero and held them there for years on end. The policy was always absurd. Why can't interest rates be zero? Because there is such a thing as the passage of time. Oh, freaking A. Passage of time? Come on, Epic Times. Freaking use stupid terms. Consuming in the present of resources stored by others must always come at some cost. This is true whether money exists or not. A super simple example, let's say your bushel of blueberries costs me one egg today, but I won't have an egg until next week. The blueberries will cost two eggs next week. Why? Because consuming now and paying in the future always comes at a cost to the borrower and to the advantage of the lender. The lender can grant me charity, but that doesn't take away the price of time. The entire yield curve as we know it today is nothing but an elaboration of the simple example. In normal times, the normal assumptions, the longer period of maturity, the higher the rate. But even at the shortest maturity term, the rate in a normally functioning market is always positive. So for Bernanke to force a situation in which the passage of time costs nothing and is even negative is the equivalent to manufacturing heaven on earth. It is an illusion that cannot last. It also introduced horrible distortions into the production structure. Money and capital seeking returns left the present and chased the future, which is why big tech and big media ballooned out of control, sucking away vast resources from plain savings, small businesses, retail, and other such normal things. Normal. Paul always knew that this policy was dangerous, so he set out to reverse it in 2019. He was making a bit of progress, hoping to normalize market signals and get the production structure back on a rational track. But then came the pandemic, and Congress went bonkers with spending. He stepped up and provided liquidity to the tune of 6.2 trillion in newly printed money. Never. Don't print money. Don't make the federal. Them printing money just tanks the dollar even worse. Realizing the mistake and trying to grapple with the inevitable price inflation, Paul reversed course. His only choice was to be ferocious about it. He embarked on the highest and fastest rate increases in the historical record. Those rates bled very quickly through the yield curve, and all U.S. treasuries were repriced. Such a move always introduces a problem for the holders in old bonds bearing fixed rates. They necessarily they necessarily trade at a discount. Any holders of them will certainly have a problem that the value of the bond portfolio will be devalued. And who held them? Many large banks. And why? There are two reasons. First, the tsunami of money that flooded the world from, two, from 2020 to 2021 ultimately lands in the banks. Normally, the banks would flip that to loans, but that was not viable in this scale. Second, the government regulations after 2008 directed banks to put spare cash not into securities or others instruments or some risk, but rather safe government bonds. Banks complied in the last 6 months with the new Fed policies. Smart risk managers began to offload the devalued bonds at a discount, but not all did. Silicon Valley Bank was apparently so caught up in its ESG, DEI, and LGBTQ stuff that they completely neglected banking basics if they knew them at all. After all, holding underwater bonds is one of the leading causes of bank failures. So there you go. There you go. That right there, Silicon Valley Bank is apparently so caught up in their ESGs, the DEIs, and LGBTQs to even care about themselves. They neglected their banking basics, and look what happened. They're now gone, done. What's up, D? What? Don't worry, the taxpayers won't pay for it. Yeah, right. Yeah, you will. Great grandchildren will be paying for it if they ever, get the chance to live. The right policy, the obvious answer in the path, any rational of and the path any rational central banker should choose at the point is let the failure take place. Just simple as that. Just let the failure take place. It's okay. It's all good. Fail, take away everybody's money, and have no money for yourself. All's good. Yeah, let it take place. Um, the liquidation would have happened. The assets sold. Depositors would have been paid off at 50 to 70 cents on the dollar for all uninsured deposits. There's absolutely no reason in the world why you should not have happened. As of yesterday, that's what everyone believed would happen. But here, the Biden administration intervened in ways that are probably displeasing to Jerome Powell. The Treasury Department, completely without justification, promised another heaven on earth. It would bail out every last depositor completely. With that one action, the United States has now embarked on an even more dangerous course. It was granted full reserve to every single bank deposit, no matter what. Bank failures are normally deflationary in their effect, but with unthinkably large de facto bailouts of banks, we have prescription here for the opposite. Treasury Secretary Janet Yellen says that taxpayers are not on the hook, but there are other ways to pay taxes besides through government revenue. You can also pay with more devaluation of the currency. If the United States keeps going with this policy, we will have the worst of both worlds. Rates will continue to rise while the central bank will keep pouring money into the system to keep it afloat. With ever more quantitative easing, one force cancels out the other force in succession. of disasters until we reach a final endgame of hyperinflationary crack up. Boom. As Craig Perron points out, we aren't going to see anything like the Occupy Silicon Valley movement like we should. That's because the bank that is being saved by the main lender to the woke crowd that is entirely behind the Democratic Party, they're in charge and are completely prepared to pillage the entire gross national product to bail out their ideology and their friends. That's what it comes down to, is that shit right there. It's exactly what it is. Let's go ahead. Let's not give a shit about anybody. Let's go with this woke ass bullshit and see how far we can get. We should pull up the fucked around and find out button for him. Um, this wicked little move might buy the Biden administration more time to put a damper on the possibility um, of contagion for now. But long term, this policy threatens to cause even more damage than the zero rates of 2008 and the monetary stimulus in 2020, 2021. That it's an offering of eternal paper money welfare for the entirety of the woke ruling class. It's an offering of eternal paper money welfare for the entirety of the woke ruling class. It will always be forced to do that over the preservation of underlying soundness of the money. The tragedy here runs deep and wide. The powers can be, uh, the powers that be are engaged in so many errors that it's getting beyond the point of being flexible. Not even the best president in the perfect 4 years will be in a position to reverse all this wreckage. Not nobody. Nobody's going to be able to reverse any of this. The lockdowns in 2020 were certainly the turning point that even then, allowing the system to liquidate itself without intervention could have possibly righted the ship in time. But on the present course, there's nothing but wreckage ahead. Uh, 9 people watching. Share this out to your friends. Let them know that we're actually here. Um, if you haven't already, please subscribe. Hit that like button for me. Um, let's see if I can't get somebody in here. Somebody that would actually have some thoughts and opinions on this. Banks linked to cryptocurrency community collapse. Could new regulations have prevented this? Potentially, but this is the direction that I have a feeling that we're going to actually go in a hole. Is they want to actually go to cryptocurrencies and skip everything else. We have seen several banks fail in the first month of 2023. The failures seemingly came out of nowhere. However, there are a few commonalities among the banks that failed. It will try to connect some dots for you. Oh, yay, dots. I listened to a live stream from law firm Foley and Lardner partner Pat Daughtry, um, said that all 3 banks had relationships with cryptocurrency community. Ah, um, No, I sent the link out to somebody in particular. See if they're come join me. Um, I listened to a live stream from law firm Foley and Lardner. Partner Pat Daughtry said that all three banks had a relationship with the cryptocurrency community. Biden appointee Gary Gensler, chairman of Securities and Exchange Commission, was trying to break the on and off ramps between the cryptocurrency community and any fiat banking agency. Silvergate was first to fall, then Silicon Valley Bank, then Signature Bank in New York, where former Rep. Barney Frank, Democrat out of Massachusetts, was a board member. Oh, huh. On March 13th, Silicon Valley Bank's largest competitor, First Republic, failed. This is not former President Donald Trump's fault. As some claim, Barney Frank heavily lobbied to change regulations in 2018 um, on, on smaller banks. Applying Dodd-Frank regulations to smaller banks killed communities in regional banking. Community and regional banking kept the banking industry decentralized. That is a good thing for risk management. The more centralized things are, the larger the point of failure. Would the world have stopped with no bailout? It says, certainly. You feel a lot of empathy for startup firms that used these banks. No, I really don't. I really don't. They'd feel a cash crunch, but based on the presentation I saw from international law firm Cooley, uh, most would have seen 100% of their cash in time as the bank went through the receivership process. Innovation would be continued, maybe at a slower pace. Venture capital firms would have had either renegotiate deals with startups or extend loans to them. That's really the reason the venture capital firms were yelling like 2 year olds having a tantrum. Yeah, I bet. Initially, powers that be in Washington, D.C. said no bailout. That was the correct thing to do. And it would have been correct in 2008 too. But the powers that were then bailed out banks when they should have let them go through bankruptcy. In this case, the Washington crew caved to wealthy venture capitalists. Huh. You don't say. DC's that corrupt? Hmm. Instead of letting places go bankrupt and fail. Oh, let's protect them. Let's protect them because we all have investments in these banks, and we know dang well if we protect them, they'll protect us. It says, guess who the representatives of venture capital are? Democrat California Governor Gavin Newsom, Vice President Kamala Harris, former Speaker of the House Nancy Pelosi. In the aftermath of the financial crisis 2008 2009, which is exemplified by Rep. Frank's roll the dice policy, the Democrats wrote and passed Dodd Frank. It was sweeping change to regulation and bank law. Huh. Representatives of venture capital, Gavin Newsom, Kamala Harris, and Nancy Pelosi. And that's something. And that's something. What's going on? I just happened. Oh, okay. Who got rich during the 2008 stuff? Oh Oh, we might actually find out that today. Let's see if we can't dig through this and find some more stuff. At this time, I wrote that it was one of the worst bills to pass Congress since the Affordable Care Act, and that I would do nothing to stop future failures. I have since been proven correct. Capitalistic free market economies are not brittle. They bend, but not break. Crony capitalistic economies are brittle and break constantly. The United States has a crony capitalistic economy today, and there are points of failure all over it in several industries because of over regulation. More regulation is not going to make the banks safer. These banks fell for two reasons. First, were intentional actions of Gensler to rein in cryptocurrency. I believe that's the biggest one right there. They want to tank the economies across the board so they can actually bring in cryptocurrencies across the board. Nobody needs cash, nobody needs money. Everybody's got cryptocurrency, and then you go off your ESG, and guess what? Let's see if maybe this guy wants to join. The second reason these banks failed is they had terrible management teams. Yeah, that's what it was. Who's the management team? That didn't understand the difference between accounting numbers and economic numbers. That caused them to misprice, that totally avoid hedging their risk. They were they were derelict in duty and failed in their fiduciary responsibilities to both equity holders and depositors. Writing new regulations cannot fix stupid. First Republic doesn't even list a risk officer as a member of the C-suite management team. The risk officer of Silicon Valley Bank was a political science major at Harvard and also a graduate of Kennedy School of Public Policy. Both banks were more concerned with making points about social issues than they were about blocking or tackling operations of running a bank. Does it feel good to depositors that at all these banks that bankers knew their carbon footprint better than they knew how to hedge their portfolios in the swaps and future markets? How then do we rectify the situation when when we know writing more regulations is not an answer? In my past life, I was commodity trader in the floor trading pit. When people made or lost millions of dollars, I watched with my own eyes. I think we can translate that experience to banks. If a bank doesn't have a certain amount of assets, it cannot be a public company. It should have no access to capital markets. It must be formed like an old merchant bank before the cessation of Glass-Steagall. The management teams would have more money in the bank, and when the right arm is doing something the left arm didn't like, they'd have to face discussions about it. This is always the great thing about old Wall Street partners at Lehman Brothers, Bear Stearns, and Goldman Sachs. When one partner got out of line, another partner reined them in. The sort of internal peer pressure went out the door with the ability to of those firms to access public markets. Stoppage of Glass-Steagall. Dumb. How did that change banking? With no access to capital markets, they have to get deposits to grow the bank. They also would have to hire qualified people who really understood banking and risk instead of hiring for reasons that made people feel good about themselves. Instead of a few super banks, the banking industry would become more fragmented. Do not believe then the spin that the taxpayer won't be on the hook for this. Bailouts are not free. Exactly. Bailouts are not free. Anybody that thinks that the bailouts aren't going to actually tumble down to where we have to actually pay for this issue, I really seriously, you haven't been paying enough in taxes. If you haven't been disturbed with the billions and billions of dollars that have been sent to other countries that we have to pay for, here you go. Here's another one that they're going to try bailing out, and it's the banks. And guess who gets to pay for that? It's not the government. The government has $0. The government only has money when we give it to them. Though they think they have unlimited funds and they can just do whatever they want, that's not how it works. Who backs the Fed? The taxpayer. If they charge banks higher rates for FDIC or other insurance, those costs will find their way to your bank statement and you will bear the burden. If the Federal Reserve slows its interest rate increases to fight inflation caused by prolific government spending, especially during Koof, that will have a different sort of economic cost in your pocket, but do not be confused. You, the taxpayer, are bearing the brunt of the bailouts just like you did in 2008. Yeah, the views expressed here are opinions of the author do not necessarily affect the views of Times. Yeah, go figure. But, at the same time, there's a lot of interesting information to come out of all this when it comes to these banks that are tanking. Cryptocurrency is really going to be a thing. Any of you that actually did get into crypto and actually, own crypto, you might be better off than those of us that have never had anything to do with crypto whatsoever. I think zero cryptocurrency. I have nothing to do with cryptocurrency. I never figured cryptocurrency to be a thing, and it seems as though it just might be. No, I know you're. I know. Chat's here. I love it. I love that chat's here. All 10 of you. All 10 of you that are here. It's exciting that you're here. I'm glad you are. If you haven't, please hit that like button for me. This is what I like right here. Jimmy YouTube.
Captain, permission to come aboard.
Yes. It gives me somebody to throw something against and actually create conversation. That's why I like it. Did you know that the country you live in and the bank and banking can take all of your money to use for war purposes? I mean, that's exactly what it's. I mean, they can do whatever they want. They can, because we've given them the right to do that. We've totally given them the right to do that, which is, scary in itself. We should almost all own like gold assets or something.
Or just real estate. Own something. Own something tangible that has value. Firearms.
Firearms.
Or houses or land. Land is really good because that is real estate. That is something that is tangible, that is yours, that has value. That is your cushion.
Which, I mean, it all sounds good or whatever if you can actually invest in it and actually own something.
Yeah,
but,
right. Like easier said than done.
Right, exactly. This is if you don't have the money straight out, you go to a bank. You give them, a deposit of of so many, $1,000, whatever, and they'll give you a loan for so many more thousands of dollars to actually, make a purchase. Uh, they hold the lease or whatever for, say you're buying a house, they're going to hold the title or the lease for the house until you have it paid off, and then you get it back. Then it's finally yours. So only if you can actually get it paid off to the bank will you actually,
So
own that property.
this
Otherwise, if you
went down. That's why all this conversation is going on. Yeah.
what's
Like
that?
this other bank just went down. That's why the
Yeah,
conversation.
yep. There's a other than just the SVB that actually went down. There's another bank uh, out of New York that actually just shuttered, as well as a couple others, international banks that are actually having issues as well.
Yeah, I saw it. It's a weird name. I think it was Suisse or something.
Yeah, that one. That one.
Hear me. There we go.
There it is. So this one. Markets price at central bank panic as credit ensues, default risk soars. So this very large bank or whatever, this Credit Suisse is actually going to have some issues. So
Whoa.
this disbursement statement got even worse after Wall Street Journal's reports citing unidentified people familiar with the matter. ECB officials contacted lenders at its supervisors Wednesday to risk about financial exposure to Credit Suisse AG.
Bro, that says worserer.
It does.
I'm fucking dead.
This is Zero Hedge, so it's independent Tyler Durden article. So as far as that goes, it's fine. If regulators do not handle the Credit Suisse situation well, this will send shockwaves through the whole sector, said Jos Beaumont, head of bank research and Dutch lender ABN AMRO. To make matter worse, both sides of the Atlantic have banking issues. Yeah, they do. So he says, aside from the global de-risking, anxiety over Credit Suisse has sparked a huge dovish response in Fed expectations, with the odds of 50 BPS hike tomorrow at the ECB tumbling. So then you can look at these points. Look at how crash.
But I'm curious about that plateau. When is that? I can't get a good look at it.
These are days. So this is 13th. This is the 14th. This is the 15th.
Oh dear. Man, they're taking it day by day with this shit. Oof. Oof. It's like, we're up today. Ha, ha, ha. Don't leave.
The entire curve of expectations ECB action has collapsed, with the market now pricing in only 75 BPS of hikes by year end. So then you can kind of see, so March or February 28th, March 8th, and then March 15th at the bottom. So between the 8th and the 15th, you can see the dramatic drop in rate change. And just ridiculous. It's just like we're done.
Holy crap.
Yeah, look at all these. This is, and even more notably, Fed hike expectations have plunged. With next week only a coin toss between 0 and 25 BPS in September pricing at 60 BPS of cuts. With terminal rate falling, the closer sooner may and done. So I mean, you can see almost everything. Look at all these different lines. It's just, everything's tanking. Everything's just done. With terminal rates falling and coming sooner, may and done. Federal rate expectations.
Beautifully inappropriate. Worserer cannot be a word. It's just not. She says it's a legitimate word. I don't believe it. That's too crazy. I stand by it.
That looks like my brainwaves on acid. Let's see. Pricing in total panic by the Fed with expectations of over 100 BPS of rate cuts by year end. So this is February, March. I don't really know what the circle is or whatever, but it's kind of showing this weird, but total drop.
Yeah, what it actually is, what is a failing bank.
Yeah.
That looks. Holy smokes, dude.
Just looked at my shot.
It is a real word?
It's a real word.
Come on. Come on.
Worser is bad writing. Use worse. I mean, it really.
It's just like a parody word. It's just funny to say because people know what you mean.
Sure.
Like you would only say it in a funny context or like, I don't know, trying to set some sort of mood.
I mean, trying to make things worse than bad and then worser, you know, I mean, to add another to it is.
Do you want things to get worse?
Worser,
Right? It's like a salty cracker thing.
As we detailed earlier, Credit Suisse Group AG's shares reached the lowest point ever, dropping by as much as 10%. This is the 8th consecutive session of decline, which comes in the wake of restructuring issues, delays in submitting an annual report due to the material weakness flagged by the SEC last week, and a broader industry sell-off following the collapse of Silicon Valley Bank. In addition to these challenges, the troubled Swiss bank now faces a new problem. Its top shareholder has said that they will not invest any further due to the sharp decline of valuation. So when your shareholders say, "Nah, I'm not going to invest anymore. I'm done.
Oof.
I'm done with you." What happens next?
They said, "We are all the single ladies. We are putting our hands up and leaving."
We are all the single ladies. It says the answer is absolutely not, for many reasons outside the simplest reason, which is regulatory and statutory. Saudi National Bank Chairman Amir told Bloomberg TV in an interview on Wednesday. So, I mean, even Saudi banks are having issues, right?
Yes.
That was in response to a question about whether Credit Suisse would receive fresh injections of another liquidity crisis emerged. Saudi National Bank, which is 37% owned by the kingdom's sovereign wealth fund, is Credit Suisse's largest shareholder as of late 2022. After acquiring a 9.9% stake, Al Qudari said that there are no plans at the moment to take a stake over 10% threshold because of regulatory hurdles. In the last several months, since the bank's equity has been in waterfall lower, the Saudis have lost more than 500 million francs in that position. The Saudis were perhaps done supporting the troubled Swiss bank, sent shares down as much as 25% to a new record low in Zurich. Look at how freaking low that shit is.
Holy shit. Downtown. Oh my golly. Way the hell downtown. They're at the courthouse, dude. Look at that shit. Yikes.
With digital money, the government can track every penny spent and can freeze your funds at whim, so it can think you've spent too much on alcohol. They can shut off your funds. Or buying anything else. They're like, "Oh, you on bills. You shouldn't eat." It means even worse than initially thought. This climate requires such an expression. We'll be seeing war bonds soon. Yeah, I bet.
I
Both
said,
Canada and the USA are in debt with the World Bank. Go ahead.
I was saying that's ridiculous. I don't know if you've ever seen the really old commercials, dude, but like after every commercial, it'd be like, invest in war bonds. You can still find them. You can still find them on YouTube. They're on there. Invest in war bonds now.
Tweety US News says Zurich is normally the benchmark of stability. And look at where they're at. Beautifully inappropriate blocked comment that we can't show says, unfortunately, the government already owns my ass, so it looks like I'm fucked. Obvious reasons why that was actually blocked. 2DS News says, unfortunately, the government already owns my ass, so she took Tweety's taking the blocked comments and reposting them for us.
What a legend.
There's something wrong with YouTube in the last couple days, supposedly. Like modding doesn't work.
What?
Like anybody that's a mod actually goes in there or whatever. You click on that show button and it just says error failed. Try again. Like
Oh,
there's absolutely zero modding that's actually happening. Which
they're
is gonna
trying something, bro. They're trying something. Something going on. Something going down. Something going down.
I'm gonna be very pissed off when I can't block a sex bot.
Did you see all the people leaving Portland?
I did not.
Everybody left. They left. They're gone. And then Minnesota's like, yeah, we'll take your trannies. Ah, come on. Minnesota, dude.
Tweety porn bots incoming.
Yeah. That.
So putting the new record low in context, down over 98% from the 2000 highs. The red area is post Greensville debacle. And I mean, it's deep, dramatic.
That's a nosedive.
So this one, for whatever, this is going up. I don't know what this is here. So this is, bear in mind the CD remains SIFI, prompting systemic risk fears, and has led to the cost of insuring the bank's bonds against default in the near term to distressed levels. 1 year credit default swaps the embattled Swiss lender were indicated at 835.9 basis points on Tuesday's close of business based on the pricing source CMAQ. Other pricing sources point to a further rise on Wednesday, while a level of 1,000 would indicate serious concern. Okay. Credit default swaps embattled Swiss lender indicated 835 basis points on Tuesday's close of business based on the pricing source. Other pricing sources point to a further rise on Wednesday, while a level of 1,000 would indicate serious concern. I mean, it's at 835. That's not so far away from 1,000 when you actually look at, the general. Hey, you're like, oh, that's actually really close.
You can pawn an Xbox and make that. Money wise.
Follow these harmless links, www.froggystyle.frog. Whatever, Winnie. What's up, brother? Good to see you, man.
Says D what?
D what says, well, there's a porn not, and then had to actually say bot. The first one was actually heated, blocked, and nobody can actually share it because Error, try again.
Oh,
It's so ridiculous. There's a microscopic stamp on everyone's ass that says, I own you, the government. 5-year credit default swaps have widened the most ever, indicating that the restructuring of the bank and the hope to bring it back to profitability might be unattainable at the moment, as a banking crisis triggered by SVB sparks contagion. Also today, Credit Suisse chairman Axel Lehmann stated the bank isn't considering government aid and that it would be inaccurate to draw parallels between its current difficulties and the collapse of SVB. We have strong capital ratios, a strong balance sheet. We already took the medicine, referring to a restructuring program announced in late 2022. Barclays told clients this morning that the outlook of European banks remaining uncertain in the short term, citing too difficult to predict risks in restrictive pathways and monetary policy. The anxiety over credit is spreading globally and is certainly not ring fenced, as an entire European banking sector, stock and credit, is cratering. European banks are lagging down in this news, and you can it's dramatic each day. This is the 9th going into the 10th, going into the 13th, going into the 14th, going into the 15th.
jeekers.
Yeah, right. This is like steep drops.
Oh. Glad I'm not banking with them. Man, I wonder who's next.
EU banking credit risk surging. Credit risk. Yeah, I mean, this is going to get worse and worse. Yields in the German 2-year slide. This is March 13th, 14th, and then 15th. So that's German government. You know, it's like everywhere. Everywhere's having issues. European short-term rates markets are pricing at 50 BPS hike by ECB next week. Everything's just pointing down. Look at these big, huge, steep dives, prompting de-risking everywhere as the flight for safety flows. See the 10-year yield in the U.S. tumble to 3.53. I mean, you can see it was down lower 2 days ago than it is currently, but this is a huge, steep drop today. It's amazing. It's amazing how much this drop is today. And it's like, what the hell?
Hey,
Man,
that
equity.
shareholder, all the shareholders, all the shareholders, all the shareholders, put your hands up. Leave the.
See, that's the thing is these shareholders that have put millions and billions of dollars into this, they're the ones that are actually in the most trouble. They're the ones that are in the most trouble, because if this shit goes down or whatever, only like $250,000 is actually covered through the insurance or whatever. The rest of it's not.
They're the super rich, though, right?
That's what they say.
So aren't they just gonna? There's always the other investment, another investment.
So here's this. This one says crude oil crashes.
Oh,
Things haven't been getting worse already. There you go. Let's drop even further.
jeez. Yeah, we're gonna have war.
15-month lows. Look at that shit.
Oh,
That's just ridiculous. And gold outshines everything as contagion risk surge. Look at gold. Up. Big up for gold.
which means gold's more expensive now.
Yep. So if you actually owned gold beforehand, your gold may be worth a little bit more than it was yesterday.
Oh, I got some gold.
Yeah.
Shiny
Plated something.
They'll like that, right?
He's like, look at my plated tin. He's like, wait a minute here, what? It is possible for regional banking crisis to not. It is possible that the regional banking crisis is not yet resolved and may even be spreading across the Atlantic. I mean, as we've seen, you can see all these issues that are coming from this. It's just amazing. It's amazing what the hell this world is actually, going through right now. And it's like, oh, it's okay. It's okay. No big deal. Joe Biden says we'll fix that. We'll fix that, and we'll bail him out. Let's give him some money to bail him out.
Yeah, let's just put the criminals on the street. That'll lighten our load a little bit. Idiots.
Okay, so then here's Tucker Carlson.
Oh boy, he's gonna make that face.
This is a Slay article, so grains of salt are always needed. The Slay really does the Slay things. They really do. It's amazing what kind of terms and words they actually use. The Tucker Carlson warns banking crisis will lead to digital cash. Yeah, absolutely. That's the way I feel. It's the Fox News star Tucker Carlson has warned his viewers that Democratic President Joe Biden's administration will usher in a federal government-controlled digital currency if Americans don't make their voices heard over the banking crisis. Well, here's my voice. I'm scared. We're done. We're gonna get screwed real quick here. Suzanne says, "Have an amazing day. Gotta run. You as well, dear. Yeah. Have a good day. Enjoy what comes of it."
Gross. Like they're really just doing fine. What if this is just to scare us into digital currency?
That's what I think it is. It's a scheme to get us to be like, oh, everything's done. Banks are shuttered. Because it's gonna these larger banks are the ones that are having issues now. Doesn't mean it won't affect the smaller banks. Like we just seen off that last graph or whatever, almost every bank has been tanking. Almost any, doesn't matter where you are, Swiss, German, French. We've seen it. We've seen everything's tanking across the board. So if everything tanks across the board, I really don't see how that's really gonna not affect us. It's gonna actually start affecting us in our banking. If you got large amounts of money in your bank, if you're an investor, you might actually think of starting to get out of there with take your stuff with you, so you don't actually get stuck. It says during the opening of his show, Carlson warned that the collapsing bank system will open a door to digital cash. On Monday morning, trading was halted on 20 banks as the markets opened. The New York Stock Exchange halted trading at Charles Schwab. Before marketing opened on Monday, banks saw their stock prices plunge dramatically, as Slay News reported.
Is that any relation to Klaus Schwab?
No, let's hope not.
Let's really hope not.
Right? The crisis severely shifted when New York's Signature Bank imploded on Sunday after Silicon Valley Bank collapsed on Friday. Silicon Valley Bank was the second largest U.S. bank collapse in history. During his show, Carlson pointed out that the federal government gained power after bailing out the Silicon Valley Bank. He also warned that his banking crisis could lead to national digital currency. The government and Federal Reserve have been working on a digital dollar for some time. As Slate News has reported, the Biden administration has recently been advancing plans to introduce digital cash. The digital currency would allow the government to control your money, income, and personal behavior. It would likely mean a further crackdown on conservatives, Trump supporters, Christians, and pro-life Americans. Conservative, Trump supporter, Christian, pro-life American. Oops.
That's me they're talking about.
I think they're talking about all of us. I really do. So I know I just read through it for you that didn't actually pay attention.
Well, we know we're about to see bank consolidation, big banks eating little banks, and that means less competition. More consolidation means more government control. So what are they going to do with that control? Well, all things being equal, if people don't start making a lot of noise and exerting an awful lot of pressure, it'll mean digital currency, a currency that politicians control. Sign up for the CBDC app to get your food stamps. You think that's not coming? Of course it's coming. They'd like it to come in any case. Now, we're not alleging a conspiracy here, but we did notice that the four biggest banks, Wells Fargo, Bank of America, JP Morgan, Chase, are doing well.
Ha!
And we also noticed the White House appears to be, maybe we're just reading into this too much.
Offer.
Thought too. All of them.
China. Yep. Bro, I said it yesterday. You didn't just say it. We all
trying
said
to
it.
induce runs on
China.
regional banks. They seem to be trying to take away your confidence in those banks. Here's Karine Jean-Pierre, the White House secretary, not someone we'd ever accuse of having an original thought, but she's a vessel for the plans of others. Here she is on Friday as SVB was collapsing.
And D-What says, by the way, he reads a script. Paid opposition does read scripts. I get that.
Now, she doesn't say a word about the fundamentals of the market or the security of your money in banks. Instead, she talks about the one thing that matters to her, which is the racial identity of the people in charge of our finance system. Watch.
I do want to take a moment to note the historic nature of the moment that you see in front of you right now. All three of us are historic first in our roles. The first Black woman to serve as CEA chair, OMB director, White House press secretary. The first Black women right in front of you for all of those.
I don't care. Congratulations. It's very cool.
Those three important key roles in the administration.
Oh, yeah.
These people lack all self-awareness, as if anyone would care. Why should we care? Is there some reason to care? And by the way, you are discrediting by your stupidity and clear incompetence anything you're promoting. You should keep that in mind. But big picture, if you want to make people less confident in regional banks and the banking system more broadly.
Because I can't actually show the stuff. Beautifully Inappropriate says, oh my God, shut her the fuck up. Yeah, we all kind of feel the same way about her. Automax says, lesbian to boot. Who cares? Yep. Who cares? Nobody cares about these first things to occur. We don't. Just because you're like, oh, look at me. I'm the first one. Good for you. Good for you.
My cousin was one of the first Minnesotans to get shot in Iraq.
You should get an award for that, Jimmy.
Right? Don't I deserve something? I feel entitled to something. Right?
I think you should be able to state your opinion and how you feel about that and that how it's going to change the world. Here you go. Do that.
That's what I hear.
If you wanted to maybe induce a run on the banks, this might be how you talk. Oh, we're all of a certain racial group. Huh? What does it have to do with whether the banks have enough cash in reserve to cover their balance sheets? So what we do know is that the Democratic Party, the Biden administration, sees this crisis as a means of expanding their control. And we know this because in a recent Zoom call with the Fed, Treasury Department, and other financial regulators with members of Congress, Senator Mark Kelly of Arizona asked whether there was a program in place to censor social media posts that could lead to a national run on banks. Now, that's according to Congressman Thomas Massie. Michael Schellenberg has a great piece on this today. Massie was on the call. So think about this for a second. You've got a deposit at a regional bank that's holding tons, way more than you know, of long-term treasuries that are worth a lot less than they were when the bank bought them. That means that bank is at risk. That means your money's at risk. But Senator Mark Kelly of Arizona doesn't want you to know about that. Why wouldn't they want you to know that? Kind of interesting. That kind of censorship could actually crush people. So we have to ask the obvious question, how close are we to some sort of disaster? And to what extent are the people in charge abetting it?
You know that face he makes when he listens to people?
The face of look of concern?
No, it's just Tucker Carlson's face whenever he listens to people. He has a face. You know the face. If you saw it, you'd know it instantly. It's just like, it's in between confusion and listening. It's just kind of a...
I'm just kind of looking through these next couple articles that I have here, or whatever, just to be sure. I don't want to, like, some of them are exactly the same as others. What's going on?
I said I got to bounce and pack pretty soon. I'm on my way to Shakopee.
Shakopee. Okay, so before this is the one that I wanted to share. This one here. This one's fun. Silicon Valley Bank board included Barack Obama, Hillary Clinton donors. Oh, really?
Huh.
So not just BLM, not just anything else. There's several places that I had a BLM article. That was one of the first things I threw up here, whatever, that showed a breakdown of the billions and millions of dollars that each business had donated to this place called BLM, including places like BlackRock, that own these banks. They all just, gave millions and millions of dollars to them. So it's like, there you go. Here you go. Silicon Valley Bank board included Barack Obama and Hillary Clinton donors. Oh, so not only are they out there sitting there donating money to places like BLM, they're also donating to people like Hillary Clinton and Barack Obama, as well as, oh, look at that, Nancy Pelosi. Several Silicon Valley Bank board directors have donated thousands of dollars or have direct ties to prominent Democratic politicians like Hillary Clinton, former President Barack Obama, and Rep. Nancy Pelosi. Federal investigators are now looking into the role of the board, may have played in the bank's abrupt collapse as the board members failed to prevent its failure. Although there are 12 board members, several under scrutiny for their donations and connections to Democratic politicians. For example, Director Kate Mitchell is a Clinton mega donor who prayed at a shrine after Clinton's 2016 loss to former President Donald Trump. I prayed for me and us to get beyond our grieving and shock and to figure out how to engage and listen to what happened and come back together, Mitchell said. Mitchell also donated $50,000 to Clinton's victory fund. Oh, really?
Jeez.
Next on the list of Democrat donor SVB board members is Garen Steglin, who owns a vineyard less than 15 minutes from Pelosi's family Napa Valley estate. Oh, really? As the New York Post detailed, we gave Biden Victory Fund $10,000 in 2020, $54,000 to Clinton's Hillary Victory Fund in 2016, backed Obama with $35,800 in 2011, and gave Democratic National Committee $10,000 last year. Oh, you don't say. You're all tied up with all these Democrats and these bullshit of BLM. And now all of a sudden you're having issues. Oh, no wonder they just went ahead and said, oh, we'll bail you out. Here you go. We got you. Some board members also donated to political action committees for Democratic Senate leaders Chuck Schumer, Senator Mark Warner, a Democrat out of Virginia, who sits on the Senate Banking Committee. The Senate Banking Committee. Oh, sounds like a conflict of interest to me. Another SVB board member who ties to prominent Democrats, Mary J. Miller, who served as Obama's domestic finance undersecretary of the Treasury Department for 2 years. Huh. I wonder how she got the job that she got.
Wow. I love it when it all fall together, man. It's just right the words.
It's just like, oh,
Right.
look at all this information right here. And that's something. Oh, there's a couple blocked. Leftist cesspool. Yep. Tweety, I won't fudge you. I'd smash Pelosi. D-Watch, come on.
Have
You would
some
not.
self-respect.
You would not.
Come on.
Don't lie to us. That's the one thing that we hate the most is lying. So, you know. I mean, if that's what you really want to do, I mean.
Maybe he means Pelosi's daughter.
Oh, have you seen her?
Not recently.
Okay, let's finish this out real quick so we can actually. We're almost at 2 hours. We can probably get out of here pretty soon here.
Cool.
As the Post noted, the only real banker in the Silicon Valley Bank board is Tom King. The board's newest director, King, brings 35 years of experience in investment banking to the board, having spent years at Citigroup and Barclays. The Post, who reported that the Democratic donations were part of SVB's business model, everyone knew it was a go-to bank for woke CEOs. One source told the outlet they knew they were aligned politically. The company's SVB loaned money to all had a woke agenda.
Ooh.
Huh.
Fascinating.
You
woke.
don't say.
It broke.
So, yeah, that's exactly what's coming to mind. Go woke and go broke. And this is what happened when you fuck around and find out. You really seriously, they're tanking us. They're tanking us taking us through the cleaners. Nobody's going to be safe from this. Not a single one of us. So let's see real quick. And couple more things for you really fast. This one, BuzzFeed sees 106.4 million net loss in Q4. Company had majority funds at Silicon Valley Bank. 106.4 million net loss in Q4 alone. Kind of sounds like BuzzFeed might go away. Nice little graphic you got there, Jimmy. Fuck around and find out. Really not going to read this article or whatever. You should actually go check it out and see what's actually up with BuzzFeed and what's actually happening. You can see that, 106.2 million net loss, an estimated loss of $4.23 million. That's a lot of fucking money.
Holy shit.
BuzzFeed
what would you do with $50,000, man? If you got it, it's yours. What would you
$50,000?
$50,000.
I'd probably pay off my student loans.
Jeebus.
Just to say it's done. It's over with. I no longer have to worry about it. It's whatever. So I mean, obviously that's not happening anytime soon.
Damn, bro. That's enough. just can't stand is that student loan shit. Like, people your age having to pay that off is ridiculous. You shouldn't have to worry about that.
And then, of course, here's the last one. This is the last one I'm going to do here. This one. Silicon Valley Bank shareholders sue the parent company for unspecified damages. So, original article was from The Hill. These are the ones that are inset, and you can see Red State goes ahead and they actually, put theirs inset, and then they go and they write a story about each little paragraph. So this is shareholders of collapsed Silicon Valley Bank have filed a class action lawsuit against the bank's parent company and its leaders over allegations that it did not disclose how interest rates increase could have an effect on the business. They're not wrong. At Red State reported financier, the radio host Zach Abram laid out how it was obvious for everyone in the industry, but this information was not relayed to the average American and the shareholders of the companies. It was gross incompetence of highest order. The shareholders, led by Chandra Venapenta, filed the lawsuit on Monday against SVB Financial Group, former CEO Greg Becker, and Chief Financial Officer Daniel Beck to seek unspecified damage for investors who backed the bank between June 16th and March 10th. Or June 16, 2021 and March 10th of 2023. The complaint states that quarterly and annual financial reports from the bank did not take into account warnings that the Federal Reserve gave about raising interest rates. The complaint also alleges the 2021 annual report understated the risks posed to the company by not disclosing that likely interest rate hikes had the potential to cause irrecoverable damage to the company. Specifically, the 2021 annual report stated, our interest rate spread may decline in the future. Nice picture, Jimmy. The parties accused CEO Becker, CFO Beck, in intentionally deceiving investors in an act of reckless disregard for the truth. In quarterly statements filed, they painted a calm picture of SVB's finances to investors, when fact on the ground of the rumblings of Federal Reserve indicated otherwise. They claimed that the public statements were false, misleading, and a violation of the Securities Exchange Act of 1934. Led by Venapenta, these plaintiffs are the first in line of what is expected to be a very long line of lawsuits against the bank. Their troubles led when CEO Becker unloading $3.6 million in SVB stock starting in January, when his sudden resignation as director of the Federal Reserve Bank of San Francisco. On Friday, the bank's walls began caving in, as senior editor Joe Cunningham reported. The bank's parent company, SVB Financial Group, was racing to find a buyer after scraping a planned $2.25 billion share sale Friday morning. Regulators weren't willing to wait. The California Department of Financial Protection and Innovation closed the bank Friday within hours and put it under control of the FDIC. SVB, based in Santa Clara, California, earlier this week surprised investors by announcing that it lost nearly $2 billion selling assets following a larger than expected decline in deposits. The stock has lost more than 80% since then, and tech clients rushed to pull their deposits over concerns about banks' health. After major financial losses, SVB tried and failed to find a buyer. Shares at its parent company, SVB Financial, fell by 60% on Thursday, which led to the aforementioned loss in market value in their institutions. And it was downhill from there, as Red State further reported, a focus of diversity, equity, and inclusion initiatives. That's your DEI, rather than mitigating investor risks, may have been a factor in a lack of oversight conducted. It may
All right, man. Well, I got to kick out. Thanks for having me on. I appreciate it.
Oh, okay. You have a good one.
Hey, you too, man. Be sure to give this show a like, guys. Come on now.
Jimmy's. I'll put a tagline down in the description here in a short bit. Make sure that you click on that and subscribe to him if you hadn't already.
Peace.
Later, brother. Its main headquarters spending over a year looking for a replacement risk officer probably did not help matters either. And so then you can see Unusual Whales actually posted a tweet that says, "This is real from the Wall Street Journal, why SVB failed. Besides 91% of the board being independent, 45% women, they also have 1 black, 1 LGBTQ, and 2 veterans. I'm not saying 12 white men would have avoided this mess, but the company may have been distracted by diversity demands." And I'm not against any of this either. You know, so you can put any 12 people in place. I'm fine with that. But when you're going to sit there and you're going to actually, you know, tank our economy in a whole, shut banks out, obviously there was something that happened that needs to be talked about. So the SVB disaster has caused ripple effect throughout the financial and banking industry. Along with the upcoming lawsuits, the finance industry, market watchers, and concerned investors will be unpacking its demise for months to come. I'm saddened to, you know, hear about all this shit that's actually happening. And, you know, I may have not given you the best report on all this or whatever, but I sure as hell dug around, try to find as much as I possibly can to give you as much information as I could about this current situation. The current situation that is going on with this is it's going to continue to evolve as we go, and as it evolves and turns into more and more of a thing, there's going to be a lot more people that are going to be named. As opposed to just the names that we saw. Jimmy YouTube's link is down in that description line. Make sure you go check that out. If I didn't give you enough information, I'm sorry. I really am. If there's any questions, we'll take a few minutes here to actually answer anything that I possibly can. Go ahead, throw questions up in chat. Direct them towards me. Put my name in there if you can. That's usually the best. If you haven't caught our early shows, make sure that you actually check us out tomorrow. We will be back here again at 6 o'clock Eastern Standard Time, and then back here for news again at 10:30 Eastern Standard Time. Great stream, Frog. Thanks. Shanique was stunning and brave. This is my new name. Respect my diversity. No. Not gonna respect anybody's diversity. I really don't care about your diversity, your inclusion, your whatever that you actually want. I really don't. We'll actually go away with this. And I found this very, very fun, very interesting. As I actually had a bunch of other stuff that I had up for articles. I shot them all out and I just turned on everything that I had for this SVB stuff or whatever, because I'm like, oh, I'll just make the show about that. I found this very interesting. So this is Canadian hockey fans sing U.S. national anthem after mic cuts out. So Canada goes and sings the U.S. national anthem for us after this lady's mic cuts out. That's what I'm talking about. If that doesn't give you goosebumps, you have no patronage. You don't care about this country whatsoever. I swear. Having another country actually stand up and actually sing your national anthem for you because the microphone cut out. That's special. That's very special, and I'm so glad that they actually did such a thing. Obviously, they're having the same issues in their country that we're having here. This is not just a United States issue, and for them to actually stand up and sing the national anthem, it's heartwarming to actually think, hey, you know, people can actually stand up and get along with each other, and I just thought it was great. Like, this ain't that country. What are you talking about? I mean, I thought it was great. I thought it was one of the best things that I had seen. But yeah, this is, you know, Canada standing up and actually singing a national anthem for the United States is quite something. It's kind of touching to actually see something like that. I thought you'd all like that for a good end to the show. Thank you all so very, very much. If you haven't already, go down, subscribe to Jimmy YouTube. Check us out. We will be back here tomorrow, 6 o'clock Eastern Standard Time for Waking Up. And then I'll be back here for another episode of Shtick with Koolfrogg shortly thereafter, about 10:30 Eastern Standard Time. Thank you all so very much. Have a wonderful day. The man who represents the sneak of my nipples are hard as diamonds. Okay. That sounds great, Automac. Thank you all so much. Y'all have a wonderful day. We'll see you tomorrow. Later.